traders from across the globe, and welcome to the weekend webinar. One of Oscar's weekend webinars. Rock and roll and get ready to go. This webinar is going to be called The Long and Short of It. Okay? The long and short of it. That is the lesson in this weekend webinar. Traders, this video, 970, rock and roll on 970 videos strong, all educational classes to help teach you the art of technical analysis. This video is being filmed on Saturday, Jan 19th, and it is both the long and short-term view that OMNI sees of the markets going forward. The S&P, the NASDAQ, the DAX, the FTSE. We're talking about the markets that are called the indices around this world, especially the US and some European indices. So, before I get into this weekend webinar, know this: futures trading can be extremely risky. It can cause substantial financial loss. You can lose way more than you planned on in this game. So always know this: a stop is your best friend. Futures trading is not suitable for all trading accounts. And if you do not have risk capital, don't play this game, because boy, oh boy, you can get knocked around if you don't know what you're doing. However, if you follow me, I promise to help teach you how to read these charts, and that's going to help you in volumes going forward on how to trade these markets. Now, traders, I stood in front of you on a Wednesday night, last Wednesday, a few days back, today's Saturday, a few days back, got in front of you on a Wednesday evening and said, any good analyst worth his salt knows that formations on a chart rule over anything else. Formations rule over indicators, over news, over static, over noise, and more than anything else, formations rule over gut feeling. And I said that to you here on camera on Wednesday for trading Thursday and Friday. Well, I also told you that the formation that we're talking about was a bull flag, and that there are bull flags all over U.S. indices. This is the exact writing that was on the board on Wednesday. I have not changed it. So here we are, Saturday, weekend webinar. What am I here to tell you? First of all, what a monster call. Watch out for those bull flags, right? Market went up Thursday and Friday and is looking strong. What else am I here to tell you? Not only are there bull flags all over these charts now, but there are inverted head and shoulder formations. And inverted head and shoulders simply looks like a market that runs up, consolidates a little, runs down, consolidates again, runs back up about even with this side, consolidates one more time, looking sort of like this. Market goes up, consolidates, down, consolidates, up, consolidates. Here's your inverted or upside down head and shoulders. What should happen from there is a bull move. Now we have the inverted head and shoulders and the bull flags all over U.S. indices charts. Traders, I'm about to show you a bunch of charts that will absolutely illustrate where these markets should be going next. Omni is calling bullish for next week. Omni's calling bullish short term, what to do on Monday, Tuesday. Omni's calling bullish longer term, what to do for the next few weeks. Now, of course, there may be some down days in between, but for on record, for Monday, Tuesday, even though Monday's a holiday, European it's not. So Monday, Tuesday, we expect up. We do expect up for the next 6 weeks, possibly. But Monday and Tuesday, we're calling for the upside, and I am going to show you why. Now, traders, I'm about to show you a multitude of charts, and I promise you these charts are really interesting, so make sure you pay attention. If you would like to learn how to read these charts the way I teach them, the way Omni knows how to call markets, if you want to learn what the Omni stands for, it's Oscar's Market Navigational Indicator. If you would like that indicator, you come on down to livewithoscar.com, fill out your OmniCamp application. Oscar is holding me, baby. I'm holding an OmniCamp live here in Las Vegas, 4 days. It is going to be held officially now March 1st, 2nd, 3rd, and 4th. That's the official date of OmniCamp. Make sure that you come down to livewithoscar.com, fill out your OmniCamp applications if you'd like to attend my 4-day training session. Now, there are only there's probably 2 tickets still available, maybe 3. I'm qualifying people on the phone. One of them I kind of like, so a couple of seats I've qualified out. One of them I'm still working with the guy, and there's a couple of more seats that are left open if you'd like to come to OmniCamp. So, If you'd like to qualify for those seats, come on down and make sure that you fill out your OmniCamp applications. All right, traders, with no further ado, let's go look at some charts.
Traders, Oscar Carboni is holding another OmniCamp live in Las Vegas. OmniCamp is an intensive 4-day course taught by the Wall Street whiz Oscar Carboni himself. Oscar has been analyzing markets and trading commodities on and off the New York trading pits for over 30 years. Trading for a living is a very difficult business. Oscar will simplify the process so that you can easily understand and analyze the markets. Classes are limited. For more information, call 702-629-4755. Our phones are staffed 24/7. Futures trading is risky and can cause substantial financial loss. Trading futures is not suitable for all accounts.
Okay, traders, both the long and short of it. We're looking at the short-term view, so here's the short of it. This very same chart I showed you on Wednesday, my previous video, and I said ignore the gap. The formation is bull flag. We have one bull flag. Now we have another bull flag. We should get up above that. And in the last 2 days, it's exactly what has happened. So formations absolutely are ruling here. I told you that the gap is a phenomenon, not a formation. The gap's a phenomenon. The flag is a formation. Formations rule, and that is what happened. Now, traders, $44 billion plus has poured into stock/equity funds in the past 2 weeks. That is not going to slow the market down by any means. That's what the bull flags are showing us. Here's the fundamental, and here is the technical to prove it. Let's move forward. Traders, you're going to love this because after the short-term view, we're going to do the long-term view. Here is your NASDAQ short-term view. Of course, you held the 200 bar on this last bull flag that was made. You stayed in the bull flag this entire week. Bull flag looks fantastic. NASDAQ, now that it's starting to slowly break away from Apple, will move higher, should very much hit the top of this. As Apple falls off the edge of the world to wherever Apple wants to go, you will see your NASDAQ decouple from Apple, and NASDAQ will continue higher while Apple feels its pain. So, NAPLDAQ is starting to become NASDAQ. Look at that beautiful bull flag. Another daily bar chart is your Russell 2000. Remember, on Wednesday night, I told you there are bull flags everywhere, and bull flags take precedent over anything else. Here is one of the bull flags I showed you in that video, and here is the end result, traders. Technical analysis is not a fool, baby. Technical analysis is nobody's fool. A round of applause for such a great, great instrument that we have. Technical analysis will point you in the proper direction almost always. Then you have the Dow Jones Transportation Average, deemed the leader of U.S. indices. This is a daily bar chart. It is the leader. Look at what the leader has done. It's been in this wonderful parallel channel, or F flag, and it does not look like it's going to quit anytime soon. You should easily find your way up here. The leader tells us there is no reason at all on these charts to think downside. Looking at the short term, now let's step this thing out. Both the long and short of it. You've seen the short of it. Let's go look at the long of it, traders. Dow Jones Industrial Average weekly bar chart. What does this tell you? Well, right off the bat, wonderful parallel channel since 2009. Since the lows were set in 2009 down here. You can't see them because it's not showing. This goes down to the lows of 2009, and we start moving higher. So wonderful parallel channel. Here's how parallel channels work. You start at the bottom side of a channel, you go to the top. So bottom to top, bottom to top, bottom. What should come next?
The top.
The top, absolutely. So we're expecting the top. That takes us minimum to 14,000 in the Dow if it gets to the smaller red channel. If it tries to work its way up to this green channel, we can't even fit it on the chart. It's way up there. It's near 1480. So let's see where it wants to go. 1400 is in the stars for now. Let's work on the little red channel before we talk about the big green one. That's a weekly Dow Jones Industrial Average chart. Now, NASDAQ, remember how channels work. Bottom, top, right? So you start at the bottom, you make your way to the top, works its way down, whoa, hits the top, works its way to the bottom, works its way to the top, works its way to the bottom. What should come next?
The top.
The top, right. It should work its way up to the top. That's how parallel channels work. Now, traders, if you're wondering if we're in a bull or bear market, any market that starts on the bottom left side of your chart and moves all the way to the top right, I don't care who tells you it's a bear, tell them that's a bull market. NASDAQ weekly, extreme bull market. Some people are trying to call this a head and shoulders. No way, not happening. This is a bull market moving much higher inside of its channel. Let me show you what else we have. The weekly E-mini S&P. Traders now will start to look at those inverted head and shoulders. You've seen all the bull flags. They're all over these charts. So are inverted head and shoulders, and inverted head and shoulders are bullish. Big inverted head and shoulders in the S&P breaks out into this parallel channel. Well, look at what S&P has just done. Now S&P has gotten above its previous high. Look at it right here. Stuck its head up, wants to move higher. This is a weekly bar chart. There is nothing on these charts that is bearish, even slightly, traders. Another view of the S&P. Let's step it out even further. I have been showing you this chart for 2 years now in many, many videos. I have shown you this chart many times over. Here we are once again. You've seen it. The repetitive patterns are the cornerstones of accurate technical analysis. You've heard me say that many times. Now look at this. V bottom goes into a parallel channel. Falls out of the channel, V bottom goes into a parallel channel. Falls out of the channel, V bottom goes into a parallel channel. Falls out of the channel, V bottom goes into a parallel channel. Falls out of the channel, V bottom goes into a parallel channel. It just started. It's got to go up here. It has to. That's what it does. That is technical analysis. Repetitive patterns are the cornerstone of accurate technical analysis, and that is a repetitive pattern. Another piece of proof that on the daily you should think higher because the weekly looks higher. Then you have the Dow Jones Transportation Average. Once again, our leader. Traders talk about inverted head and shoulders. Oh my word, look at this. Inverted head and shoulder. 1, 2, so left shoulder, head, right shoulder. Leads to another inverted head and shoulders, left shoulder, head, right shoulder. The whole thing turns out to be one major left shoulder of an inverted head and shoulders, the blue. See, the red is the little one, another little one next to it. The blue thing is one whole shoulder. Then there's a head and another shoulder. The whole darn thing is one ginormous inverted head and shoulders. That is as bullish as the day is long. Now you look at the head, and it's got an inverted head and shoulders in it. You look at the right shoulder, it has an inverted head and shoulders that we're just breaking out of. And look what we did here. Previous highs before the crash in 2008, and we're above those previous highs. More proof that you have to expect more upside. Then you have another look at the very same chart. Traders, same chart. Zoom out a little more. Parallel channel. Bottom, top. Bottom, top. Just came off the bottom, right? Or just about kissed it. And look at us coming out of this wonderful pennant. Now we're here. We are moving higher. We're taking out these highs. We're taking out these highs. And we are just going to continue higher because that is what the leader, the transportation average, is showing us. Let's move on. There's more. This is wonderful, traders. Look at the Russell 2000 weekly bar chart. Remember, these are all weekly charts. Inverted head and shoulders leads to a big rally. Comes down, inverted head and shoulders, rally, inverted head and shoulders, rally, inverted head and shoulders, and the rally is just beginning. Here's where we are right now as of Friday's close. That is your Russell 2000 on a weekly. More proof. Look at the DAX, traders, the German DAX on a weekly bar chart. This resistance line goes all the way back to the highs made in 2007, comes all the way down to here, then comes across the previous bull flag that we've just had. Bull flag, broke out of the bull flag into a parallel channel. The German DAX on a weekly bar, that looks absolutely fantastic, traders. So Germany coming along with us, or Europe, I should say. Then you want more proof? Look at the T-bond chart. This very same chart is what I put before your eyes in my last video, but I showed you a daily and a reason why it would break down over the next few days. Look at what has happened. Now, traders, since April of 2011, we have been holding this green line. So support held, support held, support held, support held, support breaches. Comes under the support for the first time since April 2011. This now is opposite the stock market at this point. If this goes down, it will propel the stock market higher. Bonds going down means the money is flowing out of bonds and into the stock market. That's where the money will be going. out of bonds into the stock market. So as bonds go lower, it propels ES higher. Bonds have broken this wonderful support, and this looks like it's building a little bear flag, which it'll continue next week, and down you will go even further, traders. That is what I'm seeing. Your weekly bonds are opposite of your stock market. Weekly bonds look lower. The stock market absolutely looks higher. Pull your own charts. Do your own homework. Come to Oscar's Omni Camp if you do not know how to do these charts for yourselves. So, traders, there it is. Did you see anything bearish on those charts at all? This is the weekend webinar, and that has been my gift to you. Traders, I really hope this helps. Listen, I am 31 years deep in this business. There's a lot of crackpots out there that talk a lot of junk about the markets at the top, and I think this and I think that. Who cares what people think? We read charts. You know why? Because the charts will teach you and show you where the market is going, and none of these lunatics out there that say, I've got a feeling, or I know it looks toppy, it looks. Forget about the people that say it looks. Tell them, you know what? Show that to me on a chart. Because the charts that Oscar show us, they don't look bearish, and neither is he. And all I do is give you the opinion off those charts. If you want to learn how to read those charts the way I do, remember to come on down to Omni Camp, traders. Omni Camp, if you come down to Vegas, I assure you, in 4 days, I will transfer some knowledge to you that will absolutely help you go forward. You will thank me for years to come. Now, traders, that's about it, because it is the weekend, and I want out of here. I do want to tell you this. Don't trade alone. I have free trading rooms. I want you to come down to my free trading room where I can help teach you the art of technical analysis. There is no charge. A free trading room means it's free. Don't be afraid. Come on down. There are hundreds of us Omniacs that gather there every day. Now, traders, I will say this. I am taking Monday off. I'll be around to do some homework, but I am not going to do anything. Neither are you. Monday's a holiday. Smell the roses. Take the kids out. Enjoy your life. Stay in bed. Do whatever you want. But leave the markets alone. It is an official holiday here in the U.S. I will see you Monday night and every day moving forward for the rest of the week. Don't forget, livewithoscar.com is the place to be. All right, traders, so that's it. Weekend webinar is over, and I will see you at my next video. Don't forget, always keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stops are in. Emotions are out. Traders, thank you so much for tuning into the long and short of it, the weekend webinar. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.